All right, this will work. Okay, so we're going to talk about fintech, and I'm going to try to set a land speed record for getting through the most slides at this conference. So we're going to move really quickly. So I'm Dan Rosen. I work at Commerce Ventures. I created it about 2.5 years ago. A little bit about Commerce Ventures and about 3 minutes on it, just to give you the background for why we know about fintech. Commerce Ventures is a sector-focused fund. That means we invest really only in 2 areas. Companies that are innovating either in fintech and payments or in retail and commerce. And there's obviously a lot of overlap as it pertains to retail payments. I mentioned that we have strategic investors and advisors. Truly, all of our investors to date are strategic, either as individuals or as corporates, and I'll come back to what that means. Typically, we're investing early stage, but once companies have early product market fit, so very rarely are we investing before a product exists. And our investment sizes are typically below $1 million in Fund 1, which we just completed investing, or at least completed initial investments. It was typically $250 to $500K for an initial check. In Fund 2, which we've just done a first closing on, and started making a couple of investments, that's going to be more like $500,000 to $1 million. So Fund 2, we expect to be about a $40 million venture fund. We've done a first closing that's almost half of that. Sorry for the big picture. I usually use this slide when I'm on conference calls. But I've been in venture for about 15 years. The last 6 before starting Commerce Ventures, I worked at a firm called Highland Capital. And the roots of why I started Commerce Ventures really go back to the days at Highland when I was building a much more sector-focused strategy back when I was in their Boston office. And I focused on mobile, and then I added a payments practice for Highland. And when I moved to the West Coast in early 2011, I had to become a generalist, and I realized that I missed being very focused on the areas where I had a strong network and a strong advantage for sourcing deal flow. And Commerce Ventures really was an outgrowth of the realization that I could compete unfairly if I leveraged a very focused approach. So, as part of that realization, I just went back and looked through all of the deal flow that I looked at when I was at Highland, and I mean, by being focused, I looked at, I think there was 8 unicorns that we looked at during my time at Highland that I either sourced or were part of the analysis of, and this is the benefit of focus. We also, just a little bit more about Commerce Ventures. We have a team mostly in San Francisco that does the rest of the work when I'm not in the office, but we also. Our LP base is a pretty strategic part of what we do. So the individuals that invest in our fund, almost all of them have built or run successful companies in payments, fintech, or related sectors in commerce. For example, Pete Kite, who founded a company called CheckFree, sold it for $4 billion, and then later was the vice chairman of a company called Fiserv, which is one of the biggest players in the payment space. Eduardo Castro-Wright, who used to run Walmart USA, as well as he was the vice chairman of all of Walmart. Scott Thompson, who used to run PayPal. And we have a network of about 36 of these types of individuals who've invested in our fund. And the goal being, if we all work together, we can source the best deals, invest in the most interesting companies, and add the most value. We also have 3 corporate investors. One of them is the largest provider of prepaid cards in the US. The second is the largest provider of tech to banks in the United States. And the third is one of the largest insurers and the largest direct bank in the United States. So again, really focused on a very sector-oriented strategy and group of investors and ecosystem. That's led to a lot of very relevant deal flow. Over 1,000 deals since we started, mostly early stage, and almost all in our sectors. We've built a pretty compelling portfolio. I won't brag too much about those guys, but this is the slide I like the best, which is the aggregate revenues of our portfolio. We have a total of 25 in Fund 1, should almost reach $300 million next year in revenues. So, now that I'm through the commercial, what's going on in fintech? So I think everybody here, first of all, who here invests in fintech or is interested in investing in fintech? Okay, good. You're in the right room. So you're not alone. Fintech has become quite a hot space over the last 5 years. When I started investing in fintech nearly a decade ago, there was nobody investing in early stage of fintech. So this actually caught me by surprise over the last 3 years. The other thing is that the growth in fintech investing is not limited to the United States. It's the growth is really global. You're seeing it across many different geographies, across Europe, across Asia, and in the Middle East as well. And it's not just VCs investing; it's also corporates. We're seeing loads of large incumbent financial institutions investing in startups, as well as payments players and the like. And not surprisingly, there's a lot of exits in the space. So strategics investing, they figure out they like a company or an opportunity, and then they end up buying the business. In fact, fintech has been a very robust exit sector for actually quite a long time. It's just over the last 5 years that it's become more robust for early stage venture-backed startups. So there's no question, and this is sort of the ultimate metric, just search volume on the term fintech has exploded in the last 5 years. So that begs the question of why. Obviously, there's this huge shift that's happening in platforms. Adoption of mobile is driving a big portion of this. And I'm going to apologize in advance there's a little bit of US centricity to some of these slides. I think the presentation after me will cover a little bit more of the MENA-centric approach or view. But definitely in the US, what's driving this is rapid adoption of mobile banking and mobile as a platform in general. That's being driven by demographic shift in our population. So younger generations, not surprisingly, want to use digital first and primarily mobile. And so there's a lot of talk about the Millennials. And the Millennials are this swath of population segment that will eventually spend $10 trillion in their lifetime. But today are, kind of don't have a lot of money and don't have a lot of patience for traditional ways of interacting with financial institutions. Just to give you a sense for that, Millennials are about 3 times more likely than other demographics to open a new primary bank account, which might sound positive, except for the fact that they're about 5 times more likely to close a primary bank account. So it doesn't take a genius to figure out that this is a big threat for traditional financial institutions. Some of my slides have a little bit of sophisticated analysis, like this next one. This is not a good trend. Anybody could tell you this. The number of financial institutions in the United States is decreasing dramatically. If I just draw a little line, you can see that over time, that number is going to head towards 0. And so the question is, why is all this happening? Well, the bigger getting big. So in a technology-driven ecosystem, which financial services is, the big guys are able to dramatically outspend the small guys, and that's evidenced by these statistics. So the top 4 banks spend the vast majority of all IT dollars that are spent in financial services. So the small guys are falling further and further behind, and that's evidenced by the amount of assets that are being generated by the top 10 banks versus the rest of the ecosystem or the rest of the industry as a whole. Meanwhile, there's other competitors, folks like Intuit, who have direct-to-consumer offerings, and they're not a bank. There's players like Walmart who've partnered with Amex to create banking products, even though Walmart is not a bank. And then there's a whole bunch of digital internet players who are offering payments and financial services products that, they're also not, in most cases, banks themselves. So, with all of those, all of the reasoning behind the challenges, what are the opportunities? So, we all remember in 2008 when we hit the financial crisis skids, basically lending ground to a halt. Securitization stopped, lending froze, but meanwhile there were a whole bunch of there were P2P lenders, that's what we used to call them, who were just sort of hitting their stride, and as a result, it's created a whole new industry. So you've got this alternative lending industry and really platform lending or marketplace lending that has drawn a huge amount of investment capital. So these are some of the leading players in that space. In the U.S., we also have an issue around retirement planning. On average, most people don't have pensions, so you have to invest via 401ks or 403bs. But the problem is most people don't really understand how to optimize their investment options in those types of plans.
I don't know.
So the 401k and retirement planning space has received a lot of venture investment as well to help people make better investment decisions. Everybody here, I'm sure, is aware of what's going on in the electronic payment space. Obviously, there continues to be a lot of growth there. As that area is growing, there's been a lot of investment in companies like Square and Stripe and Braintree. And of course, as electronic payments grow, so does fraud. So there's a lot of interest in investing in fraud prevention companies. Security and fraud has received a lot of investment recently. B2B Fintech. So there's not only do consumers want better experiences as it pertains to financial services, but so do companies that are sending payments or doing financial planning. So there's been quite a lot of investment in the last 12 months in this space. But not only do businesses need technology, they also need credit. There's a huge drop-off, and they were affected just as much as consumers when that occurred, especially SMBs. And so there's been a number of companies started to provide access to capital for small and medium businesses. Big data is a trend and a term that we talk about a lot, and financial services and financial institutions need just as much help as any other industry. And so there have been a number of startups started in this space, and actually this is a big area of growth as people, as banks need help in underwriting as well as risk management and using data to do those better. There's a lot of talk also about just banking in general being a much more open environment. So establishing APIs for banks so that consumers can get access to their transaction data, and so that they can enable other applications to be built on top of that transaction data. So companies like Yodlee have been in this industry for quite a while, and now there's other companies like Plaid and Intuit has offerings for aggregation that enable this as well. And so the result of that is that there's a bunch of applications that are being built by pulling data out of your banks without ever having a direct relationship with that institution, and delivering a lot of value to consumers, just going over the top to get access to that data. Acorns is a good example. This is a spend and invest application, and its growth has been pretty tremendous. But again, wouldn't have been possible without aggregation and more open platforms. So I'm going to slow down for a second just to hit this point. I talked about millennials earlier, and this is I think a relevant theme across all regions. So this demographic really doesn't like traditional financial institutions, as evidenced by a survey that was done that shows the top 50 brands in the minds of consumers in the millennial generation. There's not a bank on that list. And if you look at NPS scores, it backs up this point, which is nobody in that demographic really enjoys the banking experience as it is today. So there's been billions of dollars invested over the last couple of years in companies that are creating new user experiences for millennials around financial services. And of course, no slideshow on fintech would be complete if I don't talk a little bit about Bitcoin and digital currency. This has been kind of a bumpy sector in the last couple of years. So in 2014, there was a ton of money invested, and actually 13 and 14, a lot of money invested in startups in this space, just as the price of Bitcoin was falling out, the bottom was falling out of the price of Bitcoin. So it's a little bit difficult to figure out what's going on in this space. Certainly the speculation has slowed down. But interestingly, this year, the prices kind of recovered a little bit, and all the while, there's been increasing activity. So I think most people, at least conventional wisdom that in conversations I have, most people are still uncertain whether or not Bitcoin represents a fundamental sea change in the way that we spend money. But actually, everybody seems to be universally excited about blockchain technology and very interested in applying it to a bunch of other applications. And then last but not least, of course, there's plenty of other areas we could talk about, but insurance technology is the latest thematically interesting or exciting area for fintech investors. Insurance companies are probably the slowest moving and most laggard of the fintech incumbents. But they spend a lot of money on technology, and it's a very big industry. And so actually investment in this area has increased quite a bit recently, and if you read CB Insights, and if you don't, you should if you like the space, but if you read CB Insights, I think every single daily newsletter has something about insurance technology VC investing in it these days. Okay, so I got through a lot of slides there very quickly. It gives us time to talk a little bit about investing in fintech. This is just investing 101. You know, when I was at Highland and when I was in grad school and even at HarborVest where I started off, you know, the 4 key things that always mattered in any given deal were, you know, team, what's the quality of the team, the relevance, are they going to be good at executing, are they compelling? Market, is it a big market that is ready to be disrupted, or is it a small but very rapidly growing market? Product, you know, we've heard people talk about product already, and then obviously the financials of the investment opportunity, both the deal itself, but also the financial profile of the company. So fintech has a few challenges and opportunities that are unique beyond just the standard playbook. The first is regulatory compliance. So if you're going to be investing in financial technology companies, you really ought to be focused on the regulatory environment of the company that you're investing in. And that's really important from a consumer financial protection perspective, but also from a legal, kind of anti-money laundering, perspective as well. And so in almost any geography, you're going to deal with a lot of regulatory issues for any startup that is offering a financial service or working with banks. Remember that financial services as a whole, as an industry, is an industry that benefits from scale economies. So what you have to ask any fintech or financial services startup that you invest in is, what is the minimum scale you need to reach at to be self-sustaining? If you don't ask that question, you could find that you run out of water halfway through the desert, not to use an overused analogy. And to say that financial services startups are capital intensive is an understatement. You think about alternative lending, you think about wealth management, these are startups whose raw materials are dollars. So if we get to an environment where you can't raise money, it's going to have a pretty significant negative impact on the business. And then finally, remember that banking is an ecosystem, and a pretty sophisticated and intricate one. So making an investment decision in a company that is theoretically going to disrupt kind of one aspect of the banking ecosystem may sound good in theory, but you have to recognize that there are a whole bunch of implications beyond just that one interface, and think through the implications of what it's going to take to be successful across the network of relationships in the ecosystem. The good things, though, you can have a huge success. First off, big markets. Financial services are some of the largest markets available. You can have really big successes without gaining very much market share at all. So some of the most successful financial services startups don't ever even get 1% of the market that they're addressing. Your incumbents are really slow, and so competing with them is really easy from a consumer user experience perspective. And last but not least, you're typically, being a successful startup in the financial services ecosystem is typically about serving the underserved. And in financial services, that means helping people out who probably don't have access to financial services. And that actually, and by delivering that to them, you're helping them and you're doing good. So that was a lot to get through. And I apologize for throwing so much at you. I think we're posting the slides, but I don't know. Yeah, I guess we're right at the end of the time, so we probably have time for questions. But I'm happy to answer questions afterwards. So that's it. Thanks.